So welcome to this video. In this video, we are going to discuss about the relationship between accounting and other business functions. So we normally think that accounting is a separate department which does not interact with other business areas, but it's not like that. Accounting is a very vibrant and dynamic kind of an area which keeps on like back and forth relating with other departments. So they are like highly interconnected with other departments, and other departments have to keep coordinating with the accounting department for any of their needs. Okay, so accounting is a very important department in a company. So in this video, we'll be like discussing about how accounting is related with the purchasing department, production department, marketing department, and service department. So we'll start from the purchasing department or the procurement department. The purchasing buying function is responsible for placing and following up orders. It coordinates with the accounting department as follows. See, normally in a very big companies, okay, assume that you take a company like Hero Honda, these companies will have a separate purchasing department, okay, which purchases the raw materials for the manufacturing of the bike, the spare parts for manufacturing the bike, any tools, okay, or any machinery, okay. For any kind of purchase, it is always routed through the purchasing department. Even if an office employee, he wants to buy papers, okay, A4 papers, even that has to be routed through the purchasing department. Okay, so employees can spend a little bit amount from their own departments, but if they are going to buy anything in above a threshold, okay, something like beyond 5,000 or beyond 3,000 rupees, they have to route that purchasing only through the purchase department. Okay, so small purchases can be made by every department by themselves, but large purchases like over 3,000 rupees, over 5,000 rupees are like routed through purchasing departments. So the purchase department, accounting departments are related in terms of the credit terms. Okay, so the accounting department will work with the buying department to liaise with suppliers to obtain a credit account and to negotiate credit terms which are acceptable. See, the purchasing department would try to assume that the production manager wants to buy some kind of a tool, okay, some kind of a tool or a spare part. See, this tool or spare part can be obtained from 3-4 suppliers. Okay, so the purchasing manager, what he will do is he will ask for quotation from 3-4 suppliers. Okay, the accounting manager, what he will do is he will also speak with these suppliers and he will try to find out who's the lowest bidder, okay, who's trying to sell at the product the lowest price, and who's like accepting credit sales, okay, who's like accepting the credit sales of the item, and what is the terms in which they are agreeing. For example, if the payment is to be made on 40 days, okay, on credit, or 60 days on credit, these are also are determined by the accounting department. So accounting department will also give its views in terms of which is who is the lowest priced supplier, okay, who's very favorable in terms of giving credit and who's favorable in terms of in giving the credit for the longer days. Okay, so accounting involves in a lot of decisions of the purchasing department. So that's about establishing credit terms. The next one is the prices. Even the price is somewhere the accounting department will say at what price the goods have to be purchased, because there are like several qualities of material, right? The production manager just wants to buy a tool, okay, but this tool can come in different types of qualities, okay, which is the appropriate price, okay, that accounting department will tell. Because if you buy a very high quality component or a tool or a spare part, these things will be very costly, okay, and if you keep on buying them on a regular basis, it will hurt the margins. So the price discussion also revolves around the accounting department. In terms of payment, the final payment for each and every supplier is actually routed through the accounting department. So if the production manager wants to buy some items, he will inform the purchase manager. The purchase manager will invite suppliers. Suppliers will supply the goods to the purchasing department, okay, and the payment will be made by the accounting department. Okay, so the payment is an important part, and that is also taken care by the accounting department. So there are like several data which are being captured here. For example, order details will be input by the buying department and the details passed to the accounting department. So the buying department will put it in its computer, like from which supplier they have bought, from how many goods they have bought, and what is the price at which it is bought. Okay, and this information will be then sent to the accounting department. Accounting department then will decide whether it's cash purchase or credit purchase. If credit purchase means in how many days it has to be paid. Okay, these things will be like determined by the accounting department. See, accounting department also involves in terms of inventory. For example, you might have seen opening stock or closing stock, okay, in profit and loss account or trading account, okay. Or if you have not seen like profit or loss account or anything, inventory refers to the goods that are held by the company. So goods are held by the company in different forms, okay. One is raw material, okay. Two, the raw material which is put inside the machine and which is like being produced, that's called as work in progress. And the final good, which is the final product, which is called as the finished good, okay, held by the company. So there are like three forms of uh, inventory here. So one is called as raw material, work in progress, and finished goods. Okay, see, the purchasing department will tell, okay, how much of goods have been bought, okay, and how much of goods have been sent to the production department. Okay, so the purchasing department will know how many goods are held by it and what is its value. Okay, so accounting department will cross check with them, because inventory is an asset to the company. Okay, so accounting department has to know what is the value of inventory held by the purchasing department here. Okay, so mostly it's a raw material, components, spares, okay, which are held by the purchasing department, are like their value are put together and are shown in the inventory value or stock value. So accounting department also works in with the purchasing department in terms of creating a budget. Okay, so how much of goods can purchasing department buy? Okay, what is their maximum limit in which they have to buy? Okay, so this and all are set by the accounting department. Okay, so it is not that purchasing department can keep on purchasing whatever they want. They also have a limit and they have to adhere to that limit. So accounting department will fix the maximum ceiling of the budget. Okay, so this helps you to, so why we are discussing this is, this helps you to understand how accounting and purchasing are involved, and how information moves from purchasing department to accounting department, and from accounting to purchasing department. Okay,